Hello. Hi, good morning, everybody. My name is Sylvia, and I'm doing a beginner class, basically a beginner session on Forex trading, covering the basics of Forex trading. And with me is someone I met at a seminar while I was celebrating 12 years anniversary in the Forex market and in the financial markets space. So let me ask her to hop on the call quickly so we can get started. So as we wait for Sylvia to hop on the call, just a minute, allow me to call her quickly. You can join. As we wait for Sylvia to hop on the call, I'd like to give a few references of materials that we shall be using in today's class. Today's class is basically a launchpad into an introduction crash course, which is a 5-day material crash course for beginning traders. And it's very useful for people who would like to join our pro bono classes for our Trading Tuesdays, okay? Our Trading Tuesdays is our initiative where we do have live trading sessions during the New York Open. So in the evening at 4 p.m. Nairobi time, we do live market analysis with our global educators. You can find them on our YouTube channel at Service Traders Lounge Forex channel. I would also like to mention that our website is very resourceful in terms of education on financial markets and also on financial literacy. So allow me to share with you those resources on the chat box here. So that is our website. Actually, it had already been typed. So you can see here, this is forexstl.com. Our social media handles are at Silver Traders Lounge. Our YouTube channel is at Silver Traders Lounge Forex channel, and our partner broker is PU Prime. Now, quickly, what is PU Prime? PU Prime is a brokerage firm. Okay, it offers all asset classes. It has been in existence for over 10 years now. We're currently launching in Africa. Already have a license in South Africa, in Nigeria, and we're looking to penetrate the Kenyan market. PU Prime is the partner broker or the sponsor broker for all our events, all our webinars. We're doing our Trading Tuesdays initiative in partnership with PU Prime. So the reason I've sent you this link is for you to be able to open a live trading account with PU Prime, because as we're doing live trading sessions, you need to have a live trading account to be able to execute on a demo as you practice, and then thereafter you will transition to a live account or a funded account. The reason we're launching this initiative is because we get so many questions on copy trading solutions. And so this is like a beginner's session to be able to help you understand the basics. What is a PIP? What is Forex? What are the asset classes that are being traded? What is a lot size? Okay, what is leverage? All those are basic concepts that you need to know before you open your live trading account. What is the difference between a demo account and a live account, for instance? Who qualifies to be a Forex trader? Who qualifies to be a copy trading follower? Who is a strategy provider? Hi, Sylvia, welcome back. Okay, so I'm gonna share my screen. Okay, I'm
Can you
gonna,
hear me?
yes, I can hear you loud and clear.
Okay.
Could you open your, could you open your WhatsApp? Okay. I sent you, not WhatsApp, your Gmail. I sent you a PDF
Yeah, yeah.
that we're going to use for today's reference. Okay.
Mhm.
So it's called tutorial number 2. Okay. Let me see if it's on the desktop. Tutorial number 2. Okay. So I will do this. I'm gonna make you the host and then you can share your screen. Sawa.
I can't share my screen because I'm using two different devices.
What I'm saying is, what are you using, a laptop or a phone?
A laptop.
Okay, so this is what I'm saying. I'm making you host right now. I've made you host. So as the
Mm-hmm.
host, just click on share, then you open that PDF. Unaona hapa chini penye pameandikwa share.
Yeah.
Click on share screen. Then you open the PDF.
Okay. What you're not understanding is, like, you see, for me to enter the Zoom meeting,
Mm-hmm.
I've had to like send the link to my laptop.
Mm-hmm.
So the PDF is on my phone, not on the laptop.
You can have the PDF on your laptop, on you just download the document. The reason I'm saying this is because we're going to share this recording in the group.
Okay.
Yeah, so you can just download the PDF on your desktop and then you open the PDF on your laptop.
All right.
Let me give you a minute to do that. So what I was saying before you hopped on the call is the reason we're doing this beginner crash course, 5-day crash course, is to be able to give guys who we met at the seminar a beginner friendly tutorial for them to be able to use it as a launch pad to attend our consultation classes on copy trading solutions. This is primarily so for
Yeah.
people who are in business or they have a 9 to 5 or they're busy with their day jobs or they have an entrepreneurial mindset and they want to learn how to trade, but they don't have time for classes. So that's why we're doing this pro bono class for them to be able to be attending our Trading Tuesdays, which is a free webinar for all our trading community, as well as our consultations, which are charged. So please note that there's a difference between those 3 classes. So there's a beginner crash course. There's which is now this one I'm doing it for free for our community. But if you want to join our training, you can reach out to us to understand the payment modules. Thereafter, if you want to join our copy trading solutions, I do them myself. You can also reach out to us for the rate card. But we do also have pro bono classes every Tuesday where we have live trading sessions with our global educators, which you can find on our YouTube channel and also on our website, which is forexstl.com. That is www.forexstl.com. All our financial literacy classes, all our education materials on webinars are there. So at this point, Silva, have you downloaded the document? Hello? Okay. Hi, Silva, can you hear me?
Yes, I can hear you. Can you hear me?
Okay. Let's see. Okay. Silva, can you hear me?
Yes, I
Just
can
a
hear
minute,
you.
guys. Oh, you can hear me good. Have you managed to download the document? Have you downloaded the PDF on your laptop?
Yes, I have.
Okay. Could you now click on share so we can get started?
Okay.
Guys, it's also very early. Allow me to have my morning coffee as
Mhm.
we do this. Usually I start work at 9:30, 10, but um, uh, right now it's about 8:20 Kenyan time. And we decided to do this early morning because late in the evening is usually a very busy time for me because of family and having dinner. Um, Sly, let me know if you have downloaded it and if you have clicked on share screen on the PDF. So today's PDF
So,
is covering the basics. Yeah. Mhm.
so the document. So
Yes.
when I want to share where it is, where do I tap?
Is it on your desktop? Yeah. Have you
Yes.
downloaded it on your desktop? So when you click on share, you'll see a screen there. Just click on entire screen, or you can click on the specific tab for the desktop. Then you open the document.
Okay, okay, I've seen. Just give me a minute.
Mhm. So, guys, when you see me yawning or just having a morning moment, like our voice that is not so smooth, just excuse us for today. But we're going to do our best to make sure that we give you quality production in this Zoom call. Okay, Sly, have you?
I'm not using my normal um laptop.
It's okay.
I'm using some.
Did you see the option for share screen? The fourth icon below your screen after
Yes, I have, but
chat. Uh-huh.
what I'm saying is the laptop is slow. Like it's very slow. Like it's like it may freeze when I try to share.
Okay. Um,
But let me do something. Just give me a minute. Okay, I got it. Let me just share.
yeah, kindly do. Also, guys, this class will be 30 minutes because we will have other sessions in the course of the week. Thank you, girl. Yeah, now we can see your screen. So just go to your document and the PDF and open it. Thank you. All right, guys, so let's get started, okay? It's a two-page introduction class, okay? So this is Service Traders Lounge, and that is our logo there. We believe in learning and education first, then you can trade, and then you can make money, which is profit. I'm an education partner with this broker, but for this class, we'll use PU Prime. I'm an author of the book hashtag 222 Days of Forex Education. I'm also a consultant on everything Forex trading and financial markets. That is our website, and that is our handle at STL, Service Traders Lounge, on all our social media handles. So we recently joined TikTok at STL. stl.fx. On Twitter, it's at STLForex. On IG, it's at STLForex. On LinkedIn, it's Sylvia Mushai. We also have a page called Silver's Traders Lounge on LinkedIn. We also have a page on Facebook called at Silver's Traders Lounge and also a group called at Silver's Traders Lounge. And then we're also on X, former Twitter, at STLForex. Okay. Our email is that one, the Gmail one, but you can also copy us at info@forexstl.com. This is my number. My PA handles my number. And then we also have a trading community on Telegram, and that is the link you use to open a trading account. So could you scroll down a little bit? Today we're covering the basics of Forex trading. I want you to have a notebook and a pen. Draw a triangle, okay? Everybody knows how to draw a triangle. Now, when you draw a triangle, at the base of the triangle, you will write down trading psychology. What is trading psychology? Trading psychology is your mental state, your mental capital. When you're not in the right mindset, you're not able to trade. When you don't have a positive mindset, or what we call an abundance mindset, you have a scarcity mindset. Forex trading requires you to have a positive mindset to be able to apply yourself in the markets and take advantage of the volatility to be able to cash in or make money, that is executing a buy or a sell order. On the right-hand side, 60 degrees of the triangle, write down technical analysis or what we call price action trading. And on the left side of the triangle, 60 degrees, write down fundamental analysis. Now, these two analyses, technical and fundamentals, form what we call a strategy or what we call a trading plan. This is what you use to be able to draw a rationale behind your trading strategy, what we call your personal trading strategy. Your personal trading strategy is your trading style. It varies for different people. For Sylvia here, okay, guys, we have two Sylvias on this call. Sylvia, could you activate your video or you want to be on audio? Just unmute yourself so we can go together. Do you want to be on video?
I'll be on voice on just on voice call.
Okay, on audio call. Okay, good. Next time you might be able to see her when she joins the Trading Tuesdays. So guys, we have different strategies under the technical analysis. Remember that technical analysis is also called price action trading. So under technical analysis, we're looking at the price, the difference in price amongst two different currencies pairs. Okay, so what is a currency pair? A currency pair is the asset or what we call an instrument in trading that you draw a relative price differential market movement to establish the strength of one currency versus another currency. So for example, if you want to know the major currencies, you look at the G8 countries, the United States of America, Canada, Australia, China, Japan, Switzerland, Europe, the British, Great British, UK, which other one? New Zealand. These G8 countries, when you take the USD as the base currency, and then you pair it with the other currencies, for example, the euro dollar, that becomes a major currency pair. Please note that the euro dollar is the most actively traded currency instrument or currency pair, or what we call an asset in Forex trading. So an asset is basically a combination of two currency pairs. Now, if you have an example of an emerging market and the USD, for example, the USD Kenya shilling, or what we call the USD KES, please note that when we're trading Forex, we don't do KSH as we commonly know the Kenya shilling, we do KES. So if you take a major currency, a G8 country, and then you combine it with the minor or an emerging market or what we call developing nations or third world countries. So like, for example, the USD KES, then you get what we call a minor currency or an exotic currency pair. You understand that? So Also, if you take any combination of those two currency pairs, the G8 countries, the USD being the base quote currency, then you have a major currency pair. For example, the USD CHF, that is the USD Switzerland, the USD Kiwi, New Zealand dollar, that's also a major pair. The USD CAD, or what we call the loonie, that is also a major currency pair. The GBP USD, Great British Pound USD, that is also a major currency pair. Also, Australian dollar, AUD USD, that's a major currency pair. The Japanese yen, USD JPY. So I hope you do understand. And also, if you find that I'm going a little bit faster, please write down your questions and we'll address them in the Q&A section. So we have different strategies under the technical analysis, and we also have different strategies under the fundamental analysis. Let's start with technical analysis or price action trading. The first thing we say is that the trend is your friend. You know, like the way students have Google as their friend. So Forex traders have the trend as their friend. We say that the market moves in three ways. Okay, the market can only move in three ways. This is a non-negotiable in trading. The market can either move up, down, or sideways. When the market is moving up, you're looking to buy low, sell high. That is an uptrend, okay? The volatility is moving and the buyers have the upper hand. So the market is moving up. When the market is moving sideways, or what we call a consolidation, we say that the market is in a range. And so when the market is in a range, you're looking to trade what we call pullbacks to be able to come out of that range. And then when the market is moving down, it means that the sellers have an upper hand. You're looking to sell high or short and go low, what we call the bearish trend. So if the market is moving up, we say that you're bullish or you're going long. If the market is moving down, we say that you're bearish or going short. Okay, understood? That is trend following. And I will be able to show you this in a chart example. The other thing is the chart patterns, or what we call identifying areas of support and resistance. When you're establishing a price chart, you have demand and supply zones. That forms the basic of the price difference in the market, the relative price strength in one currency vis-a-vis another. And so you need to identify areas where you identify lines on the chart pattern where you can establish a strong area of support. Okay, that is a strong area below, and a strong area of resistance, that is a strong area above. So when you draw the support lines and resistance zones, then you're able to identify where is the price moving and at what level is the price moving. Then you also have trading using indicators. Trading using indicators, we have different types of indicators in trading. Remember, you're not trading the indicator. You're using the indicator to help you determine where the price is moving. So, for example, we have the Fibonacci tool. Under the Fibonacci tool, we have an zone called exhaustion and another zone called retracement. So when you're trying to draw areas of support and resistance, you can apply the Fibonacci tool to help you determine the strong point where the market is retracing, for example, or where the market is extending. We also have another indicator called the EMA, the exponential moving average, and the simple moving average, which is the SMA. Now, for the EMAs and the SMA, they tend to work in days. So you can have like a 20-day EMA, exponential moving average, and a 20-day SMA, which is a simple moving average. Or you can have 200 EMA and a 200 SMA. So when you're looking at the chart and you're able to determine, okay, so what is my performance on a monthly basis? Then you would apply the 20-day EMA. So you basically count the days in a month where the market is being traded. Markets are closed on the weekends. Okay, so if you're doing a yearly plan, then you would basically use the 200-day EMA or the 200-day SMA. We also have Bollinger Bands. We also have other indicators that you will get to learn about. So on your homework, this would be your homework. Go to my YouTube channel and listen to the Fibonacci Queen. Her name is Caroline Borodin. And then also listen to the Fibonacci Princess. Her name is Tammy Marshall. Okay? Umeandika your homework, Sylvia?
Yeah, I'm here.
Okay.
Nimeandika.
Yeah, your homework would be to go and listen to those two podcasts on Fibonacci trading. Then we
Okay.
also have when the market is in a range, you can be trading what we call gaps and breakout trading. This is where I was talking about pullbacks, breakouts, and gaps. This I will show you practically on a chart. Also have institutional trading by following dark pools. Please remember that as a retail trader, you don't have the financial capacity to move the market. What moves the market is institutional based traders, the likes of Goldman Sachs, the likes of Morgan Stanley, because they have huge volumes. You, as a $10,000 client, you're very minute in the market. You don't have the ability to be liquid enough to move the market. So when you're trading using institutional trading, you follow the dark prints of this big institutions to be able to know the direction of the trend, to be able to know, are you buying low, selling high, or are you, so meaning that are you going bullish or are you going bearish? The other thing is order flow trading using order blocks. And this is where you find ICT trading and SMC concepts. That is ICT, inner circle trader, and SMC smart money concepts. So when you're trading using order blocks, we say that you're an order flow kind of trader. The last one is algorithmic trading, or what we call trading using expert advisors, EAs, or what we call trading bots, basically a trading robot. So this is a plug and play kind of trading where you take a coder or a software engineer and tell him, these are my trading rules. Please program this to be a robot for me to plug on my trading platform, on my MT5 trading platform provided by the broker, to be able to have this robot trade on my behalf. So under fund management, we have two types of trading. Okay, we have copy trading solutions and we have algorithmic trading. So number 8, right, copy trading solutions. Now, this is where you have a strategy provider, that's number 8, trade on your behalf because you don't have the skill to learn how to trade, but then you will give him a percentage share of the profits they generate for you. That is technical analysis or price action trading. Let's go to the second strategy, which is fundamental analysis. What is fundamental analysis? This is trading using the news, or what we call the macroeconomic factors. So here we have inflation and interest rates driving the markets. When you trade reports that are released on a weekly basis by the Federal Reserve, by the Fed in the US, then you're basically a fundamental trader. You're waiting on this particular macroeconomic and geopolitical factors to be able to trade. For instance, if you do take advantage of black swan events, a black swan event is, for example, the 2008-2009 global financial crisis, or the 2016-2021 term president, where Trump only did not succeed to go back to the office, or what we had in the case of Europe and Britain, where we had Brexit, for example. Those three major geopolitical factors do have an effect on the G8 countries' currencies and the relative strength of those currencies. And remember, whatever happens in the G8 countries in terms of price does have a replica effect on the other currencies. So, for example, the Ukraine war, okay, the Russia-Ukraine war tends to have an effect on the oil prices, okay? When you're trading oil or natural gas or what we call energies, that has significantly been affected by the Ukraine Russian war. And so if you're trading a highly volatile asset like oil, you need to be very careful so you don't end up losing your money. So when you're trading fundamentals, remember that they are high volatile and liquidity instruments when you're trading this particular using this particular fundamental analysis. And so the types of reports that you would ideally be trading would include every first Friday of every month, we have what we call the NFP, that is the non-farm payroll. This is a report that shows the unemployment numbers in the US. So, for example, if the employment numbers are good, meaning that more people have been employed, then you have a strong dollar. What does that mean? When you have a strong dollar, it means then you have a weaker pound or any other currency that you pair with the dollar. Okay, so you're looking to buy or go long the dollar and short the pound. Okay, so then if you're trading another report like the Federal Reserve Monthly Report, that is the FOMC, you need to identify and also the Consumer Price Index, the CPI, or the PPI, the Purchasing Power Index. Your homework would be go to the economic calendar. Okay, please write this down. On fundamental analysis, your homework would be on your trading platform, that is the MT5 trading platform, which you have downloaded using PayU Prime. Go to the economic calendar and identify the specific weeks. Every of this report comes out at a specific week in a month. So I've just given you one example. The non-farm payroll comes out every first Friday of every month. I want you to identify for me, when does the CPA come out? When does the FOMC come out? And when does the PPI come out? Okay, so that is fundamental analysis. Under trading psychology, remember, I told you guys, this is your mental capital. And if you're not, maybe you're sick or you're going through a mourning season, maybe someone close to you has passed away, maybe your dog is sick or your cat is sick, or you're not in the right headspace to trade, then we say that your trading psychology is not at the optimum high performance level. So we have different coaches under trading psychology. Your homework will be go listen to Dennis K. Shal, okay? Write that down, Dennis, Denise K, then Shal, Shull. Listen to also Stephen Goldstein, who's a high performance coach in the UK. Listen to Mandy, she's a high performance coach and trading psychologist in Australia. Denise and her team, Ivan Marks and John Barnes, are in the US. Please listen to those 3 podcasts on my YouTube channel. You will improve your trading psychology and you will be able to be in the right headspace to be able to trade. The second last thing we're going to cover is the instruments traded or the asset classes that you can be able to trade. And this were extensively covered during the seminar. Sylvia, if you remember, do you remember when Naomi was talking about gold and oil? Do you remember?
Yeah, yeah.
Okay, good. So we have 7 asset classes that are covered when you're trading the financial markets. The first one is the Forex, or what we call currency pairs. This is an instrument which we said, for example, Euro USD, Pound Dollar, USD Yen, USD CAD, Australian Dollar, the Kiwi, New Zealand Dollar, USD, all those are Forex, even USD KES, for example, or USD Swiss, CHF. I will teach you how to identify those, the initials for each currency pair. Okay, it takes a while, but you can write this down, www.babypips.com, pipsologyschool.com. Okay, go to Baby Pips and identify the major currency pairs and the minor currency pairs. That is your homework for under asset classes. Then we have commodities. Under commodities, we have metals, precious metals like gold, diamond, and platinum, and silver. The symbol for silver, please write this down. The symbol for silver is XAG. We have 10 minutes, we'll be done. XAG USD, okay, that's silver. The symbol for platinum is XPT USD, XPT USD, and the symbol for gold is XAU USD, that is XAU USD. Those are precious metals. Then we have agricultural commodities. Under agricultural commodities, picture everything that is exported or imported, and it is an agricultural commodity. So wheat, barley, coffee, flowers, um, corn, avocados, fruits, vegetables, all those fall under agricultural commodities. Then we have energies. Under energies is where we have crude oil and we have WTI and Brent. So WTI is crude oil, which is not refined, and Brent is refined oil. Then we have shares and equities. A share is a stock. For example, Amazon, Google, Microsoft. Okay, those are shares or what we call equities. Then we have indices. What is an index? An index is a bunch of stocks classified into one. In Kenya, we call it the Nairobi Securities Exchange, which is the former Nairobi Stocks Exchange. In the US, it's called the S&P 500. So you have 500 companies listed under one index, which is now the S&P 500. We have the New York Stock Exchange, NYSE. You have the NASDAQ, which is a bunch of classification of technology stocks, the likes of Google, likes of AI, the likes of Microsoft. Okay. And then we have futures and options. For this last two, we won't specialize on them because they're not offered by our brokerage firms. They're offered in the international global markets, but in the Kenyan market, they are not offered on our trading platforms. However, go to YouTube and listen to my mentor. Her name is Kali Garner. She has a brokerage firm called Dikali Trading. She deals with futures, options, and commodities. So write down Caligana, Carleygarner, Caligana. So that's your assignment for the asset classes. Now, we have different trading styles, what we call your trading personality. And these are determined by the holding time position. So we have two types. We have short term and long term. If you're executing a chart under 5 minutes, we call you a scalper. If you're executing a chart under 24 hours, we call you an intraday or a day trader. Those are short term because the holding time horizons is under 24 hours. Then we have long term. Long term is swing trading and position trading. If you execute your buy or sell order for more than you hold your position for more than one day, maybe 3 days going into a week or a month, we call you a swing trader. And if you hold your positions for a month, going on to a quarter or a year or a semi-quarter, then we call you a high long-term trader, which is institutional traders are here, hedge funds, mutual funds, those are position traders because they have the capital bandwidth to hold positions longer. So we're done. You can remove this PDF now. I will take questions and then we will call it the fast crash course actually. Also, please write down these resources. Go to my website, download the book 222 Days of Forex Education. The 222 Days of Forex Education covers the three pillars of trading as we have discussed, and it gives you a daily practical takeaway snippet for you to understand more about technical analysis, fundamental analysis, and trading psychology. So at this point, I want to take questions, then we will be done. We have 5 minutes. Do you have any questions?
Yeah. I wanted to ask,
Mhm.
why is trading like why can't you like trade or do with trading on weekends?
Because the markets are closed on Saturday and on Sunday. So also,
Okay. Is there
just
a reason?
mhm, mhm. Pardon?
Is there a reason?
Simply because people don't go to work and the offices are closed. Remember, you also need to take a
Okay,
break. You also need to take a
okay.
break. And
And then
also, I forgot to mention there are three trading sessions, yeah? There's the Asian session or the Sydney
mm-hmm,
session, which comes out at night, which is where you are hearing
mm-hmm,
Naomi say, Kenya, we're very lucky because the London session and the New York session happens during our daytime, okay? Mid-morning from 10,
mm-hmm,
11, London session. 3 p.m. to 4 p.m. New York session, and then the Asian session is at night. So you can be able to sleep through the night during the Asian session and wake up early, trade both the London Open and the New York Open, especially if you're a day trader. When you're day trading, you look to trade the market open because that's where the most volatility is.
Yeah.
Mhm.
Okay. And a question on the bots.
Mhm.
So, how do you like you I heard you mention that you look for like a software engineer to like custom make or a certain way you want the
Mhm.
way you normally trade.
Mhm.
So, you can do you okay, for example, do you guys like have options of maybe a client who wants a certain specification and you provide bots for them?
Mm, yeah, so we have a programmer in our team
Okay.
and they can be able
Mm-hmm.
to do for you your strategy. So yes. We also have
Okay.
a lead copy trading strategy provider who is a fund manager licensed by the CMA, vetted by the broker, who can be able to also provide fund management services through copy trading. But you open the account in your name and you'll be able to withdraw the money from your trading account. Could you also change the host? Give me the reclaiming host so that this webinar is downloaded on my platform because we have just 2 minutes. And as you do that, you can also ask maybe if you have a final question.
No, that was all.
Okay, so could you change the host? Okay, thank you. So that's it. Please, I've given you, I think, 3 homeworks. Listen to the Fibonacci traders, the princess and the queen. Listen to Brain Kelly on fundamental analysis. Listen to Stephen Goldstein, Dennis Schall, and Mandy on trading psychology. Go to your trading platform, download it, look at the economic calendar, look at the days where NFP, CPI, PPI, and the other reports are coming out, FOMC. Then go to Baby Pips, identify the majors and the minor currency pairs. That's all for today. So that's 5 days of a crash course, but we will have a review on Wednesday so that I give you time to do the homework. Okay? Hello?
Hello, yeah, I can hear you.
So actually not on Wednesday. We'll have a review, the last class on Thursday. So because this is a crash course.
Okay.
All right. Bye-bye. Have a good day. Let me know if you have any
Bye.
questions. You can always reach out to me during the week.
Okay, sawa.
Okay, bye-bye.